The Austro-Hungarian Empire entered World War I as a sprawling power of roughly 50 million people. When the armistice came, the 1919 Treaty of Saint-Germain-en-Laye carved it into successor states. What remained of Austria was a republic of fewer than 7 million people, almost a third of them packed into Vienna, a capital built for an empire that no longer existed. The country carried the administrative overhead of a great power while commanding the revenue base of a small one, and its industry had been severed from the markets, raw materials, and trade routes it was designed around. Every subsequent event in this story flows from that structural mismatch. The Österreichische Kreditanstalt für Handel und Gewerbe, known simply as Kreditanstalt, was founded in Vienna in 1855 with capital from the Rothschild family. By the late 1920s, it had grown into Austria's dominant financial institution, holding equity stakes and extending loans across a large portion of Austrian industrial enterprises. Economic historians Harold James and Barry Eichengreen have both written that Kreditanstalt was so intertwined with Austrian industry that the bank and the country's productive economy were nearly synonymous. That concentration made it powerful in good times and catastrophically fragile when conditions turned. Through the 1920s, Austrian authorities encouraged Kreditanstalt to absorb weaker, failing rivals rather than allow them to collapse and alarm depositors. The most consequential of these was the merger with the Boden Kreditanstalt in 1929, which transferred a large portfolio of non-performing loans onto Kreditanstalt's books. Because the absorptions were framed as patriotic rescues rather than acquisitions of distressed assets, the full scale of the inherited losses was not publicly disclosed. The bank's published accounts appeared solid, but the underlying loan quality had quietly deteriorated for years before anyone outside the boardroom understood the extent of the damage. The Wall Street crash of October 1929 and the demand collapse that followed it put severe pressure on Central European industry through 1930 and into 1931. Commodity prices fell, factories cut output, and the industrial firms in which Kreditanstalt held stakes or had extended large loans saw their revenues and collateral values shrink. At the same time, the short-term foreign loans that Austrian and German banks had borrowed in the late 1920s began to come due, and creditors in Paris, London, and New York were growing cautious about rolling them over. The bank was being pressed from both sides simultaneously. On May 11, 1931, Kreditanstalt publicly disclosed losses of approximately 140 million shillings, a figure that was roughly equal to its entire paid-in capital, a detail documented by economic historian Liaquat Ahmed in his 2009 account of the interwar central bankers. The Austrian government, the National Bank of Austria, and eventually the Bank for International Settlement scrambled to assemble a rescue package. But assembling international credit took negotiations, and negotiations took time, and time was the one resource a bank facing a confidence crisis cannot afford. Within days of the announcement, depositors and foreign creditors began pulling their funds. A faster rescue required France's cooperation, since French banks held significant short-term Austrian debt and France had the gold reserves to backstop a credit line. But in March 1931, Austria and Germany had announced a proposed customs union, which Paris interpreted as a preliminary step toward political union, a move prohibited under the peace treaties. France made its support for an Austrian rescue contingent on Austria abandoning the customs union plan. The diplomatic standoff lasted weeks. By the time a credit package from the BIS and foreign central banks was assembled in June 1931, the bank run was already underway and the funds were insufficient to arrest it. Germany's banks were exposed to the same structural fragility as Austria's during the mid-1920s Dawes Plan capital inflows. German banks had borrowed heavily in short-term foreign currencies and lent those funds out as long-term domestic loans to German industry. When the Kreditanstalt disclosure rattled confidence in Central European finance, foreign creditors began pulling short-term loans from German banks as well. The cascade accelerated through June and into July 1931. On July 13, 1931, the Darmstadter National Bank, known as the Danube Bank, suspended payments. The German government declared a 2-day banking holiday on July 14 and 15, 1931, and negotiated a creditor standstill under which foreign lenders agreed to freeze their German loan positions rather than accelerate withdrawals. British banks and investment houses had been large short-term lenders to Germany through the 1920s. When the German standstill froze those positions, British institutions suddenly held significant illiquid foreign assets on their books. At the same time, the Macmillan Report, published in July 1931, revealed that Britain's short-term foreign liabilities substantially exceeded its liquid foreign assets, meaning sterling's gold backing was thinner than the public had understood. Foreign holders of sterling began converting pounds to gold. The Bank of England arranged emergency credits from the Banque de France and the Federal Reserve Bank of New York to defend the peg, but the gold outflows continued faster than the credits could replace them. On September 21, 1931, the British government suspended sterling's convertibility to gold. The pound, which had been fixed at $4.86 since Britain's return to the gold standard in 1925, was allowed to float. and it fell by roughly 25 to 30% against the dollar over the following months, according to figures cited in the historical record of the gold standard. The decision was made by the national government under Prime Minister Ramsay MacDonald, which had formed only in August 1931 with the explicit purpose of defending sterling. Britain had anchored the international gold standard system for close to a century. Its departure sent a clear signal that the system itself could no longer be defended. Britain's departure triggered a second wave of currency crises. Countries that held sterling as a reserve asset saw the value of those reserves fall sharply overnight. Scandinavia, Australia, New Zealand, and several Latin American countries followed Britain off gold within weeks or months. By 1933, when the United States suspended private gold convertibility under President Franklin Roosevelt, the interwar gold standard that policymakers had spent the 1920s reconstructing was effectively finished. Barry Eichengreen, in his study Golden Fetters, argues that countries which left gold earlier recovered from the Depression sooner, because they regained the ability to expand their money supplies and support domestic demand. The 1931 cascade produced several lasting changes in how financial systems are designed and supervised. Capital controls, which had been rare in the pre-1914 era, became common practice and were later codified into the Bretton Woods architecture. The Bank for International Settlements, founded in 1930 and already active during the failed Kreditanstalt rescue, was reinforced as the primary venue for central bank coordination. Economists and regulators drew from 1931 the lesson that concentrated banking systems with poor loan disclosure, heavy reliance on short-term foreign funding, and political obstacles to rapid rescue are especially prone to cascading failure. Those structural concerns remain the explicit framework behind modern bank stress tests, liquidity coverage ratios, and resolution planning requirements. The 1931 chain illustrates a mechanical pattern that regulators specifically try to prevent today: a bank that has absorbed bad assets without full public disclosure, a political delay in mounting a credible rescue, and short-term foreign funding that can reverse overnight when confidence breaks. When you hear modern discussions about liquidity coverage ratios, resolution regimes, or international financial stability forums, those institutions are direct responses to what played out in Vienna, Berlin, and London in 1931. Understanding the mechanism does not tell you when the next chain will start or where, but it gives you a working framework for what to watch. Hidden loan quality deterioration, short-term funding dependence, and the speed of political response in the critical early hours of a confidence crisis.